Good morning to all traders and welcome to another daily market insights video provided to you, of course, by Orbex. Today is Tuesday, the 9th of July, and we have two very interesting opportunities, euro dollar and pound dollar. We don't see many similarities, but they both seem to be dependent on the dollar. And dollar's performance will, of course, depend on what the Fed chair's testimony is going to be about. Is he going to be dovish? Is he going to be hawkish? What about the rest of the FOMC members? We have like at least 10 speeches just from the US side this week. So it's going to be a very critical one because both euro dollar and pound dollar are at very critical levels. They have reached a bottom, a low that if that pretty much breaks lower for a few pips, then we could be looking for further downside. Now, before we go on to the charts, of course, today we are expecting Fed Chair Powell to speak, and also the jewelry stores opening from the US. There isn't much on the data front, to be honest, only the Mexican CPI, which could be also a good opportunity on the dollar Mexican peso. Yesterday, markets were pretty much unchanged, a little bit uncertain, with tiny bit of a downside on all the pairs, all the currencies against the dollar, because the dollar is still there's still some flows from the NFP last Friday. The question is this NFP going to be a game changer, really? Well, I doubt that would be the case. I think the Fed will go for a rate cut regardless, at least for one, okay? But of course, I'm not an FOMC member. We will have them talking and see what clues we can get from them. Now, on the euro dollar side of things, I want to start with a daily. I'm still looking at this at 1, 2, 3, 4, 5 to move higher. Fed dependent, dollar dependent. Now, the case is, are we going to break below 112? This is very psychological, very strong psychological level. And if yes, are we going to break below that level, which is the previous wave 2, okay? Well, if that is the case, what is going to happen most likely, then we're going to move a little bit lower, so we'll have to change our labeling. This will be wave 1, this will be a lower wave 2, wave 3, 4, 5. Now, the main question, the big question is, are we going to break below that level? Are we going to go below 111? If that is the case, then we're probably looking at being all a false break, and prices will start moving lower. That is not just Fed dependent, actually it will also be ECB dependent, but given Lagarde is on for a change, maybe that would be for the foreseeable future, for the near future, it would be maybe not. It would be just too over pessimistic for the euro. Anyhow, we are looking still, if we go a little bit lower on the 4-hour, we're still looking this as a 1-2, okay, and we are in the process of, having a complex wave 3. We see this as an ABC correction, which could have found an end because we've done the A, we've done the P, we're looking at the C as an impulse right now. This is wave 5. That should end around 112.19. It went extended a little bit lower. That's not a problem. Still okay within limits, but maybe very close to the limits. Now, the MACD and the RSI both give us good signs that prices could actually start moving higher, okay? What we want to see, of course, is move above 112.80, then 113.48, and that would be the validation of wave 3, okay, when we move above this level. Now, as I said before, if we move below that level, okay, we just have a new label, 1, 2. If we move above here, then we're looking, the picture changes completely. Now, we did have a good attempt over here. Obviously, after many months like breaking above this pattern, now we're back in. Is this a false break or is this a false break? That's a question that we're probably going to have an answer by the end of this week. And down on the 1-hour, I just wanted to show you that there is also some validation signals here that both MACD and RSI support that the price move higher. What we want to see, this is probably going to be like a triangle or so, okay? And in triangle, potentially, we'll have wave 1, 2, 3, 4, 5, then correction, and then break above, potentially, okay? But we're still looking at Mr. Powell's to pretty much, the euro and the pound hang on Mr. Powell's language, okay? Now down on the pound, also in a corrective pattern, we were 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. I was under the impression that would be an ABC over here, which it is, to be honest, but now I see this as an ABC of this impulse, right, with potentially a flat pattern coming in to at least 134. So this level reached down here. We are at a confluence level between the previous low, between a trend line, ascending trend line, and we have some good signals from RSI and MACD that the support bulls. Now, at the same time, it's not just that. We are also ending, okay, this last impulse wave to the downside with an open triangle pattern. And if we go a little bit lower, you will see exactly what I mean. Okay, so over here, we are on an ABC, okay. We've had the first move to the downside, correction, and then another impulse. Okay, now that impulse ends, seems to be ending with an open triangle pattern, okay, down here. Open triangle, you can call it a combination as well if you want, which is an ABC, a irregular flat combined with a zigzag. Okay, it's really up to you how you want to see this. The thing is, what is important to watch is that we've reached that level. Okay, now we want to go above 125.86, and from there we're really looking at 28.61, and then even above 134. Okay, RSI MACD support bulls as we see, okay, in this current market. And just a little bit lower on the 2 hours time frame. Nothing much changes here, to be honest. It's just I want to show you that we still got two signals on the RSI MACD. Plus, looks like we ended this first wave extension to second extension, you know, to wave 5. It's exactly the 124.77, the level we have reached. So I'm really looking forward to see, you know, after this corrective pattern, if bulls are going to break above 125.86, and then of course higher levels. I want to thank you for being, for watching for another day. Of course, I want to remind you to visit our blog. It's where we cover the latest ideas and provide all the tools a trader needs.